Canada, where he's a past chair. Following the formal presentations, members of Amvest Capital ask questions of management. We also look forward to any questions that you might send in live, and also thank you for those who sent them ahead of time, and we'll build that into the post-formal presentation discussion. So welcome to the show, Barry. How are you?
I'm doing well. How are you, Campbell?
Okay, doing all right. I'll give you the floor. We'll catch up in about 20 minutes.
Thanks for having us, and welcome everyone to the webcam. Hopefully everyone is staying safe and healthy in these times. I'm just going to start off with a quick overview of Aquila. This is just some quick highlights on the company. So Aquila is a development stage mining company. We have a portfolio of high-grade gold-rich projects in the upper Midwest of the U.S. We own 3 assets that are actually located on the Pinocchio and VMS belt. This is a mineral belt that spans the upper peninsula of Michigan down through northern Wisconsin. We think this is a real exciting district opportunity for the company. It's a very underexplored belt. There's 24 known mineral occurrences on the belt and only 1 past producer. Our flagship project is called Back 40. Back 40 is approaching shovel-ready status. It is located in the state of Michigan, although again on the same Pinocchian belt. We're well advanced through permitting. We applied for 4 permits back in 2015 to build and operate the mine. All of those permits have been issued, and we're now focused on pre-construction activities. We do think this is an opportunity to create a portfolio of synergistic assets on this belt. Well, Back 40 will serve as the hub. We have a strong shareholder base between Orion Mine Finance, Rufford, and Hudbay. They own better than 50% of the shares outstanding. And we do have a gold stream outstanding on the company with Osisko Gold Royalties. I'll go through the mechanics of that stream a little bit later, but the proceeds of that stream have been funding our operations and our development for the past few years. We think we have an attractive relative valuation versus our peers. We're trading at about $15 an ounce on a gold equivalent basis versus a peer median closer to $60 an ounce. And based on a PEA that we published on Back 40 last week, we're trading at a price to net asset value of about 0.3 times. In our economic model, we use $14.85 gold, $1.08 zinc. Back 40 is a gold and zinc rich project. And obviously, both of those metals are trading at higher prices today. In the case of gold, much higher prices. So that multiple would be much lower if you're using a spot case. And we don't think we're getting any value for the potential, not only at Back 40, the ore body's open at depth, so there's opportunity to expand and grow the resource, but we're not getting any value for our other assets that exist on the Pinocchian belt. Just a little bit about the capital structure. We have 338 million shares outstanding. Based on current share price, it equates to about a market cap of $50 million Canadian. And at the end of June, we had $4 million US in the treasury. The next slide just shows a map of where we are. That shaded area in the middle of the map is the Pinocchian belt. You can see Back 40, our flagship asset up on the northeast corner of the belt, and Bend and Reef are our 2 exploration assets, both located in Wisconsin. We do think this area is having a bit of a mining resurgence. So both Michigan and Wisconsin have passed new mining laws in recent years. And in the case of Michigan, they permitted 3 projects under that new mining law. Eagle Mine being the first to go. This is owned by Lundin. It went into operations in 2014. It's about 90 miles north of Back 40. And Back 40 was the most recent project to receive a mining permit from the state of Michigan. So just focusing a little bit on Back 40 itself, we've invested about $95 million to date on the project. This includes all of the exploration drilling, technical reports that have been done to date, land acquisition, permitting, and engineering. We reacquired the project from Hudbay back in 2014, and since that time, we've been on a development path, both permitting and completing engineering studies. So again, back in 2015, we applied for 4 permits to build and operate the mine. All of those permits have been received to date. We still have to get 1 final permit, a dam safety permit. That application is in process, and we expect to get a decision on it in 2021. We did complete an open pit feasibility study on the project back in August 2018. Again, that showed the open pit portion of the project only. It does coincide with our permits, and recently we published a PEA which incorporated the known underground resource. So again, ore bodies that open at depth, we think there's an opportunity to expand and grow the resource, and we wanted to give investors sort of an enterprise view of the project, including the underground. There is attractive exploration not only at depth, but this is a VMS style deposit. They do tend to occur in clusters, so you know, where you have one lens, you tend to have other lenses as well. So there are other targets near mine that we will look to focus on while we're in construction and operations. So this is just the site plan, shows the immediate project area and all of the facilities. So it's a 1,200 acre active project area. The company actually does control mineral rights in the area of around 3,200 acres. So the results of the PEA study, again, this was something that we published last week. We actually press released the results back in August. We think the results really speak for themselves. MPV after tax using a 6% discount rate of $176 million US, and that contributed to an IRR of 26.1%. If you do use spot, at the time we used $1,998 gold and $1.04 zinc, which was the spot prices for those 2 metals when we made the announcement. Again, you can see, because we're so correlated to gold and the price of gold, the MPV goes to 316 million, IRR approaches 40%. We actually did run the numbers earlier today, just using current spot. Zinc today trading at $1.14, gold closer to $1,900, and the MPV is actually 330 million. So that's one of the nice things about these polymetallic deposits. There is a sort of a natural hedge if it's a risk-on environment and base metals are moving higher, and gold is going a little bit lower. There's an offset there. Likewise, if it's more of a risk-off trade and gold is moving higher and base metals are selling off, there's an offset with the gold. Pre-production capital was $250 million. This was $44 million lower than the feasibility study we did back in 2018, and results in a payback of 2.4 years. So just a couple of the differences between the feasibility study we did in 2018 and the current PEA. I mean, obviously we added the known underground resource. That's one significant difference. We also lowered the throughput of the plant. So we went from 4,000 tons per day on the flotation side of the plant down to 2,800 tons per day. The primary reason for that is to better align with the mining rate in the underground. It also results in a mine life being increased from 7 years to 12 years. And there are some opportunities, we've specified them in the PEA, opportunities, for example, to increase gold recoveries. There are some investments that you can make in the flow sheet. They do have an impact when gold is above $1,600 an ounce. Again, we use $1,485 in our financial model, but at north of $1,600, you might want to look at some of those enhancements to the flow sheet to increase gold recoveries. So on the flotation side of the plant, we're recovering about 68% of our gold. So these are some production highlights in the PEA. You can see on the bottom right pie there, that's just showing you gross revenue by metal in the project. So 45% of the gross revenue does come from gold, 38% is coming from zinc, 11% from copper. The bottom chart on the left there just shows the project sensitivity to gold price. So you can see when we're at $1,800 gold or higher, this really does become a precious metals project. You know, all things being equal, you know, you're generating more than 50% of your gross revenue from gold. And in year one, we do have two high-grade gaussins that are in the pit. They're at surface. So you do mine those high-grade gold gaussins in the early years. It contributes to a lot of gold production early on in the mine life. So year one, we're actually expecting to produce 107,000 ounces of gold, or 206,000 ounces gold equivalent. So this is just the mineral resource estimate. It's the global estimate, so it includes the open pit and the underground. This really hasn't changed in the past couple of years. We haven't done any recent drilling at Back 40. So you can see the total resource, 18.2 million tons on a measured and indicated basis. Contained metal, we have 1.1 million ounces of gold, 1.2 billion pounds of zinc. And it all combines to a measured and indicated grade on a gold equivalent basis of 4.3 grams per ton. So again, we think this is a high-grade deposit, certainly delivers positive economic results. And you can see just on a comparison to some of our peer group, 4.3 grams per ton, we're certainly at the top end of the range when you compare Back 40 to other projects. So here's a 3D model of the ore body. You can see that gray shaded area. That is the permitted pit shell. Those two lobes, lobe 1 and 2, coming out of the bottom of the pit, do form a portion of the underground. This is where we do think there is a lot of exploration upside for the project. You can see, you know, at depth, at 700 meters, on that second limb, we are still getting very good intercepts. So these aren't part of the resource estimate, but you can see drill hole LK 479. We had 70 meters of better than a gram per ton of gold, 1.3% zinc. And LK 484, we had 31 meters at better than 6 grams per ton of gold. So again, we'd like to continue to drill the ore body at depth. We think there's an opportunity to continue to expand the deposit, to continue to add tons and to add resource and mine life. Permitting status, again, the 4 permits that we originally applied for back in 2015 are mine permit under Part 632, which is Michigan's mining statute, air permit, a national pollution discharge and elimination systems permit. This is a surface water discharge permit, and a wetlands permit. All of those permits have been received on the project to date. We are in process, as I mentioned, on a dam safety permit. That permit application is being worked on as we speak. We expect to have that into the regulator by the end of this year and would expect a decision in 2021. So I just want to talk a little bit about the other projects on the belt. So Bend and Reef, specifically earlier stage exploration assets, both located in Wisconsin. To give you some proximity here, Bend is about 130 miles from Back 40. Reef is about 80 miles from Back 40. We do think with these 24 known mineral occurrences, there is some additional opportunities to consult the belt. There's other good assets there that we think show a lot of future promise. This Pinokian belt, just incidentally, is about the same size and shape as Flin Flon, same age of rock, but it's only had one producer in the past. As you know, we all know Flin Flon's been mining for over 100 years. So the first project in Wisconsin is Bend. This is a copper gold deposit. It is VMS, very similar to Back 40. It is an underground deposit. There has been better than 14,000 meters of historical drilling done to date on the project, and it delineated a non-43-101 compliant resource. So this was before that 43-101 regulation was passed, and delineated a 4.2 million ton resource In the copper zone, 2.4% copper grade. In the gold zone, 4.7 grams per ton gold. So again, a nice high-grade deposit. We certainly think there's a significant opportunity to expand this deposit. It is on federal land. And in 2019, we actually strengthened our land position. We bought an adjacent parcel that was owned by a private company. The ore body actually extends underneath that property boundary. And so that will be a focus and a target of our exploration programs going forward. So this is just showing you a diagram. It shows you the mineral boundary. This lighter shaded area in the middle is the parcel that we just acquired last year. And our plan is to drill that, that property in the near term. We're targeting 8 holes at 2,200 meters for a total program cost of about $550K US. Reef copper gold project as well. This is a quartz vein style open pittable deposit. The resource actually extends from surface only to a depth of about 450 feet, so it's very close to the surface. Aquila has done some historical drilling here back in 2012. We drilled 42 holes totaling 4,400 meters. It is on private land. It's 100% owned by Aquila. And this is also a project that's had historical drilling. That historic drilling was done by Inco and Noranda, and they delineated a non-43-101 compliant resource of close to 500,000 tons, but the grades were almost 11 grams. So again, very high grade deposit. It's open in all directions. And our plan for drilling at Reef in the near term is just to look for target areas to expand the deposit. So the program that we're looking at right now is 10 holes totaling 1,500 meters for an all-in cost of US $430K. So just a little bit on the financial backing, the leadership of the company. I'm just going to start off giving you an overview of the gold stream we did with the Cisco Gold Royalties. This was a transaction that we closed back in 2017. Again, we've been using these funds to fund development and the operations at the company over the past 3 years. It was a $50 million gold stream. To date, we've received $17.5 million in 3 tranches. We have another $7.5 million that's due to us in 2 tranches on the achievement of certain corporate and project milestones. We expect to hit those milestones in the next 12 to 18 months, and then we'll draw down the final $25 million at the same time we're drawing down on a project debt facility. So the key terms of the stream, pretty simple. Cisco is purchasing 18.5% of the refined gold from Back 40. Once we deliver 105,000 ounces under the stream, the percentage gets cut in half to 9.25%. And at Cisco, for every ounce that's delivered under the gold stream, they'll pay us 30% of the spot price, up to a cap of $600 US per ounce. So this sort of summarizes into this, this one slide, which is the milestones that we're looking at in the near term. Starting off, obviously, with the PEA that we just published recently. We do plan, in addition to doing the Wisconsin exploration, to doing a drill program at Back 40. This will include a couple of geotech holes and some infill to convert some of the inferred resource in the underground that will support the feasibility study. And then, depending on budget, we'll look to do a couple of step out holes again, just to target that, that underground resource and to look to add some tonnage to the resource. This will lead to a resource update in the early part of 2021, which will feed into and support our feasibility study update, which we'll have to do and try to sync with the finalization of all permits. In parallel with that, we're going to maintain Wisconsin exploration. So again, we've got those 2 programs planned for Wisconsin, Bend and Reef, and we'll continue to look to advance pre-construction activities at Back 40, including different infrastructure activity, power, etc. So the management team and the board, I'm not going to go through everybody's bio. Campbell gave you a bit of my background at the beginning of the presentation. We do have a pretty broad swath of backgrounds, primarily on the mining side, so people on the operations and development side, people with technical expertise. What I will say about the leadership team is we will continue to look at evolving the team as we go forward, depending on sort of the part of the development cycle that we're in. We think right now, given where we're at in the development cycle, the team is sufficient. We're small, we're lean and mean, but we're sufficient to continue to move the project forward with the current team. And Campbell, that's it. I'll hand it back over to you. I hope I kept that to less than 20 minutes.
No, that was just about spot on. Excellent. What is the ratio of value for the underground portion of the mine compared to the open pit? Is it 27% to 73, or it sounds like someone who knows a bit about the project, so I'll let you finish.
So I guess we need to look at what metric are we looking at? Are we looking at it on an NPV basis, et cetera? You know, it isn't contributing based on our base case of 1485 gold. You know, it is contributing obviously some cash flow when we're in the underground phase of the operation. But when you discount it back, I mean, obviously it doesn't have a significant impact on the NPV. So on an NPV basis, you know, it's contributing marginally, but again, the upside for this project is in the underground as the ore bodies open at depth. You know, resource split-wise, you can see the pit is, you know, a little less than 12 million tons. The underground is 6 million tons. Currently.
Is the value of this crown jewel of near-surface gold sufficient enough to pay forward the costs of mining the remaining minerals?
Yeah, absolutely. We think so.
Okay. What does the company plan? Has Aquila encountered any kimberlite or diamond-bearing rock?
No, not to my knowledge, but you know, we were never looking for it. So.
All right, Gabe.
Sure. Barry, can we talk a little about the cost to hold the project and sort of the ongoing activities? What does that look like for the company, and how much lead time do you have as a shareholder here before you have to raise more capital?
Yeah, I mean, we're burning just if you look at, you know, overhead, salaries, et cetera, we're burning anywhere from 300 to 350K per month. That doesn't include consulting. It doesn't include any of the programs that we're talking about, exploration programs. Doesn't include, you know, an updated feasibility study, for example. It doesn't include work that's being done currently on the dam safety permit, et cetera. So it's sort of 300 to 350 to maintain where we're at. Certainly the plan is to raise additional capital to fund future exploration programs and to continue to fund development until we're shovel ready and we can look at options for the project and options for the company. You know, bearing in mind that that will also be supplemented by the $7.5 million, which is still owed to us under those two tranches in the gold stream, which we expect to be able to access in the next 12 to 18 months.
Okay.
So we don't need a lot of money to continue and to bridge ourselves all the way through to construction financing. But again, we do have plans that include exploration, so that will require some additional funds.
Okay, so right, so then so while you're waiting for the permitting to come through and, you know, social licenses and all that stuff, you're just going to continue to develop the project and grow the project and
start to look to drill our other assets, absolutely, and further prove up the potential of those other assets. And the goal and the aim for both Bend and Reef in Wisconsin would be to get to 43-101 compliant resources on both of those assets.
Okay, so
again,
sort of
we think the real objective here for the company is to build a portfolio of de-risked, high-grade assets in this district. We think if we do that, and we have a lot of mine life in front of us, it's going to give the company many options in terms of financing and in terms of partnering going forward.
Okay, got it. So can we just talk a little about the engineering work left for the design of the process plant flow sheet infrastructure?
Yeah. Yeah, I mean, listen, it's well advanced. We did, we've done a feasibility study for the open pit portion. What we did really on a flow sheet basis is just reduce the throughput. So that was the most, significant change. We did, in our plan, add a SART facility as well, which just produces, at the end of the day, a better quality doré. It removes some of the base metals out of the doré. It also reduces the amount of cyanide that you have to use in the oxide circuit, so there's an operating cost benefit there as well. But that's really it. I mean, a big part of what we're going to be doing in an updated FS would be more focused on updating costs and then looking at the underground. Got it.
And just on the cyanide, or on the production, what you're spitting out effectively out of the machine, is it, what are those, so you're going to be doing a doré, and will you also be doing some concentrates?
Yeah, so there's two sides to the plant, right? There's a flotation side and there's an oxide leach circuit. So the oxide circuit, it's 350 tons per day, and it produces a copper, a gold, silver doré. On the flotation side of the plant, where the sulfides go, it's three concentrates. It's a zinc concentrate, it's a copper con, and a lead con.
Got it. And the revenue contributions from concentrate sales versus the doré?
There is a slide, so that earlier slide, in the interest of time, I just didn't go through, but you can see here gross revenue by product, that top pie chart. So it shows you copper concentrate is 38% of the revenue, zinc concentrate 43%, and you can see the doré is at 13%. And again, that's going to fluctuate depending on the price of gold. So most of our gold on the flotation side of the plant does report to the copper con.
Got it. And have you done some marketing on those concentrates?
Yeah, we have a consultant that we work with, Ocean Partners, helps us with, pricing our TCs, looking at where the concentrate will end up going. So we have a number of options there, and they've written, several reports for us as part of the feasibility study and now the PEA. And, we meet with them on a regular basis. I think we have a good understanding of, where the market's at and what the charges are going to be. Mm-hmm. And so it's, I think we feel very comfortable with that. We, obviously we've met with a lot of the traders, and, we're having some early conversations there, but Ocean Partners is really our go-to advisor in the concentrate space.
Got it. Just my last question before I turn to Artie. So this pie chart here, does it take into account sort of the, like you mentioned, the charges and the discounts you'll be receiving from the concentrates, or just, yeah. Okay.
Yeah. It also, and just so you know, the economic model as well fully bakes in the streams as well. Okay. So we're not, this is NPV, it's net of taxes, but it's also net of streams.
Got it. Okay, thanks. Artie?
Thanks for the presentation, Barry. Do you have any infill drilling plans, and what is the budget for that?
Yeah, so the budget for Back 40, I'm just going to give you total numbers because I don't have the breakouts with me, but it's about 1.5 million at Back 40. It's a combination of geotech, which are expensive holes. We do have some infill that we have planned. We're targeting sort of two areas to convert the inferred. And, right now there's, as you can see by that resource estimate, 94% of the resource is measured and indicated. So it's quite well defined. It's quite well drilled. 98% of the pit is measured and indicated, by the way. So we're talking about converting some of the inferred material in the underground And, you know, it's a conversion of about 550,000 tons is what we're targeting. And then in addition to that, we'll do a couple of step out holes as well. But the total plan, the total cost for drilling and assaying is 1.5 million. So you add the cost of what we're planning to do on our Wisconsin projects, and total exploration costs are about 2.6.
Thank you. How complex will be your surface mining operations? Will there be like one single pit, or there will be a couple?
No, it's a single pit. It's implemented in 3 phases. So you know, it's laid out in the study. It's you know, we're mining in pretty standard benches, 5-meter benches. There is you know, one high-grade zone within the pit where we do smaller benches and we do some selective mining. So there will be some stockpiling of material. We've got to, you know, manage what we're putting into the plant. But that's on one specific area. It's a very high-grade zone within the pit. But you know, other than that, everything is you know, it's pretty conventional. And you know, again, the pit's been very well studied. The parameters of the pit haven't changed between feasibility and PEA.
There will be a transition to underground mining at year 5. In your
Yep.
opinion, how firm is that? Like, do you think can it be like earlier or later?
Well, I mean, there's, you know, bear in mind, there's a lot of work that still needs to be done on the underground. So, you know, it's going to require, you know, more study. It's going to require more drilling. You know, most importantly, it requires a permit amendment. So right now, you know, our permit's all focused on an open pit operation only. So when it comes time, when we have enough data and we're ready to go to the regulator, we'll have to go through a permit amendment process. So, you know, you do have to bake in some time for that. You have to bake in time for baseline environmental studies. We are doing and getting, you know, in front of some of those things by doing some additional geotech work just to look at the rock mechanics for, you know, the depth of pillars, et cetera. So there's just a lot of work that needs to be done in a short period of time. And I think that we will be, you know, probably, if we're ready to go, looking to do a permit amendment when we're operating the pit.
Okay, thank you, Campbell.
Sure. PEA, of course, states, as Artie just did, undergone mining beginning in year 5 through year 11. What is the timetable for getting the underground permit? Have you started that process?
No, right.
Come up soon?
Yeah, no, we haven't started that process. You know, we've been really focused on engineering. So this is a study exercise. You know, keep in mind it's a PEA. Again, it was meant to show an enterprise view of the project. But, you know, there's more baseline environmental work that's got to be done. There's more, you know, modeling of the underground from a, you know, a groundwater perspective, et cetera. So there is more work to be done, you know, before we're going to be prepared to go to the regulator with a permit. And so that timeline, you know, to completely turn that around, you know, including all the baseline environmental and all the upfront work that you need to do, it's probably a 3 to 4 year process in our minds. But, you know, the nice thing is, because we have construction time, plus we have 5 years in the pit, you know, this is something that isn't happening for 8 or 9 years. So we have you know, a lot of time to do that work. And hopefully, you know, in our view, we'll have done some additional drilling as well to add more resource to the underground.
Target date for construction after dam permit issue?
We'd like to be, you know, we'd like to be looking, now again, as you know, Campbell, these depend on a lot of things, right, and a lot of factors, you know, including, you know, some permitting activities, any legal challenges, et cetera, on permits. But, at the end of the day, and it also depends on our ability to raise the project capital. We'd like to be in a position, at the end of 2021, we have the dam safety permit in hand. We're well advanced on our updated feasibility study. We can start having conversations with various investors on the project financing front. And we would be looking at a construction date or submitting a notice of construction for the project sometime in 2022. It's a sliding scale right now. I think as we get into next year, we'll be able to, get a little bit more specific on what that date would be.
How does the Pinokian Mineral Belt Back 40 relate to the historic mines in Michigan, or is it the same?
Yeah,
Can
most of that
you
belt.
explain the question
Yeah.
that I mumbled? Yeah.
Yeah, I mean, if you look at the map, which I can flip to really quickly here, you can see that the majority of that belt actually resides in Wisconsin. So Back 40 is on the Pinokian belt, but the majority of the belt resides in Wisconsin. Whereas, the other mining that's been done in the Upper Peninsula of Michigan, you can see it's more to the north. And there's a lot of mining that's been done up in the Upper Peninsula, a lot of copper mining. They've been mining up in that area for 150 years. There's a lot of iron ore mining as well. But where we are on the Pinokian belt, the majority of it does reside in northern Wisconsin.
Can you comment to the best that you can on your valuation?
Well, I mean, I think we gave a couple of metrics at the outset there. I do have a slide that's, sort of dedicated to that, which is, the fallback is us just looking, at our peers in the area. I think there's a couple of factors at play here. I think that, most investors have always looked at us as more of a zinc story or a base metal story. As you know, zinc sort of fell out of favor last year. So I don't think we're getting credit or we're being looked at for the gold potential of this project. But you can see the economics are very sensitive to gold price. We're using in our minds, in our estimation, given this current, environment that we're in for gold, a pretty conservative gold price. So, we think that, and you can see that what we're trying to do is we're trying to talk to investors and we're trying to show them the real gold potential of this project. And, there's a lot of base metals here as well. There's a lot of zinc, there's a lot of copper, there's a lot of exploration upside. But the nice thing is Back 40 is underpinned by a lot of gold, which is really going to sustain and support those economics going forward. So we think we're undervalued when you look at us relative to our peer group. We look at companies all the time that are just starting the development process. I think a lot of development companies, as you guys would know, have been out of favor over the past few years. Now, some exploration is getting rewarded now. But, a lot of the valuation still hasn't, and a lot of the interest still hasn't moved down into the development stories. But we see projects all the time that are, going through PEA. They're in decent jurisdictions in the U.S., but they haven't even started the permitting process. So we think we're well down the path. We think we've got a lot of good growth assets here. And we think just if you compare Back 40 to some of these other projects, I think we're really inexpensive. And I think that top sort of graph illustrates it, where we're at $15 per ounce on a gold equivalent basis, where our peers are, looking, the peer median is closer to $60.
Has Orion Mine Finance, your largest institutional shareholder, expressed some interest and enthusiasm for perhaps financing when the time comes?
Well, as you know, they haven't been strangers to writing large checks, and they have certainly financed other projects and have written large construction checks. So, they're certainly a partner that we would talk to when the time is right. But, we do want to make it a competitive process. So we are going to talk to as many lenders, as many investors as we can. At the end of the day, we're looking to get the best possible financing structure to move the project forward. So I don't think we can just be dependent on one stakeholder.
Right. With that, I think we're going to move to close.
Okay.
And I want to thank everyone for having tuned in. And when you check out, please share some feedback when we cue you for it, and follow up in the email. Be helpful for us, and Barry will definitely appreciate. And you can follow the company on I guess LinkedIn as well. And with that, Barry, a closing statement.
Well, again, I want to thank you guys for hosting us at AmVest. I want to thank everybody for attending today, and we look forward to continue to update you on the progress, not only at Aquila, but at all of our projects. So thanks very much, everyone. Stay healthy.
Yeah, for sure. Thank you.
All right, take care.